Good afternoon. You're watching Midcap Radar on CNBC-TV18. I'm Hormas Patakia. With me is Vivek Iyer. And Vivek, when we left the show at around 1 o'clock, the Nifty was 110 points higher. We are back half an hour later. It's still 110 points higher. So absolutely no moves on the bench, at least on the benchmark index. But the broader markets are having a good day today.
Broader markets are quite a few volatile moves there. The mid-cap and small-cap index are up 1.3%. So it's a very good bounce. Yesterday, you saw very deep, sharp sell-off there. After that, you've seen the broader end of the market return, and that's good news given the fact that we are looking at the Midcap Radar today. Good afternoon, welcome to Midcap Radar. We'll look at the top headlines. We have quite a lot lined up in this particular show. The market recovers from Monday's fall amid choppy trade. Nifty gains 100 points with commodity stocks leading the buying. Bank Nifty provides support with a near 1% gain. Midcaps outperform with the Midcap index advancing over 1%.
Equinox India is locked in a 20% upper circuit after the NCLAT has granted an approval for its merger with the Embassy Group.
Zomato slips over 3% after Jefferies downgrades the stock to hold from buy and cuts the target price to 275 rupees. The brokerage believes rising competition in the quick commerce industry could be a worry for profitability.
Blue Star has also seen a downtick in today's trading session after Jefferies has downgraded the stock to a hold after a 140% rally in 2024.
GM Brewery is in focus after reporting its Q3 FY25 numbers. Net profit slips 4.3%, while EBITDA surges 18% on a year-on-year basis.
And just as I mentioned, the Nifty has now seen a slight up move from the 110 points. It's 140 points higher now, still at that 23,750 mark, but well below that 200-day moving average of 23,907. That is the important level that we need to track on the index. It's still 150 points away from there. And after that initial dip that we had at the start of the session, which got bought into, it's been an absolute flat line for the index. It has moved neither here nor there, has continued to remain in that 100 to 150 point range in terms of gains for the session today. But there is plenty of activity that is taking place in the broader markets because the mid-cap and the small cap index are having a far better day as compared to the Nifty. The mid-cap index is up 1.25%, as is the small cap index. It's slightly higher, moving higher towards the 1.5% sort of a gain at the highest point of the day. But plenty of stock-specific activity as well in the broader markets, and Upasna is here to tell us just that. Upasna, good afternoon.
Good afternoon, Hormas. Certainly, mid-caps are having a good day. Now, first up, let us focus at the top movers for today. So, first up is fertilizers and chemical Travancore. The stock is up more than 5% today in today's trading session. Next up is UPL. The stock is up nearly about 5%, and mind you that the shares gain highest in the last 7 months. Next up is Max Healthcare. The company has seen a gain of nearly about 3.5%, and followed by Mazgaon Dock Shipbuilders with a gain of nearly about 4%. Followed lastly by Oil India, which has seen a gain of nearly about 2.3%. Now let's just focus on the top losers for today's trading session. Concor is the stock that remains in focus. It is the highest fall seen in last 5 months, and stock has hit at 52-week lows. Followed by MRF, which has seen a downtick of nearly about 1%. And even this stock has seen a highest fall in the last 5 months. And the stock continues to fall for the 5th straight trading session. Followed by LIC Housing, which has seen a downtick of nearly about 1.5%. And lastly, Bank of Maharashtra also continues to remain in focus even today with a downtick of nearly about 1.3%. Now let us look at the top volume buzzers for today. Vodafone Idea continues to top the list with a gain of 3%, followed by Yes Bank with a gain of nearly about 1%. And mind you that Yes Bank has also hit a 52-week low. And lastly, Suzlon Energy also remains in focus as one of the top volume gainer with a gain of nearly about 3%. NMDC also in focus with a gain of nearly about 2%. And lastly, IRB Infra also remains in focus with a gain of nearly about 2.5%. Now let us look at the top newsmakers in today's trading session. First up is Biocon. The stock has seen a 7% up move on the back of the news flow, which is that the company has got Japan's PMDA approval for psoriasis drug, and Jefferies has also upgraded the stock and raised its target price from 280 per share to 400 per share. Next up is Kalyan Jewellers. The company has come up with this Q3 provisional update, the revenue growth stands at 39% on a one-web basis, and the company says that the strong festive season, wedding demand, and global prices aided this kind of growth. And lastly, Blue Star remains in focus with a downtick of nearly about 3% in today's trading session. Now, Jefferies has downgraded the stock from buy to hold with a target price of 2,340, and the brokerage says that there's a limited upside on this stock after a sharp rally seen in FY24. So all in all, the stock remains in focus today.
Thank you so much, Upasana, for highlighting the stocks today, especially in the broader end of the markets that are making all the strong moves. Let's now welcome Shrikant Chauhan from Kotak Securities for a technical check on the market. Good afternoon, Shrikant. Thank you so much for joining us. What are you making of the markets at current levels? Yesterday saw a very sharp downtick, but today there seems to be a little more optimism as far as the bulls are concerned.
Yeah, good afternoon, Vivek. Good afternoon, Harmas. See, yes, Nifty is it has been consolidating since morning within a very narrow range, and it is not crossing the level of 23,800 and also not breaking the level of 23,600. So on the dismissal of this 23,800, we could see up move towards 24,000 levels, and in case if it breaks 23,600, then the chances of hitting the levels of 23,200 would turn bright. So till the markets are not crossing these levels, I think we are going to see further more consolidation. But yes, on the dismissal of that, we should look for taking some trading bet in this market. So 23,800 and 23,600 is the range on which we have to focus. For specific stocks, yes, there are number of stocks which are really doing well. Few of them are forming some continuation formation, especially Fortis Healthcare, which is currently trading around some 730, 740 levels, and it has been forming triangle sort of formation since last 1 month. On the dismissal of the range of 740, we could see the levels of at least 850 or 875 in the near term. So that's the view. I think it is already into breakout mode. It's a buy at these levels with a stop loss close to 700. And the other stock on which we are bullish is Bharat Electronics. And today, when the stock was correcting, it was very close to the important levels like 200-day simple moving average. And from there, again, it recovered back. And if we see today, all these defense stocks, they are also participating in the mid-cap up move. So I think this stock is very close to its important level. It's a buy at these levels with a target close to 300, 305. And we can keep stop loss if there is any trading position close to 280 levels.
All right, Shrikant, thank you so much for joining in, sharing with us your views on the index and on specific stocks as well. Shrikant Chauhan there of Kotak Securities. But on to a CNBC-TV18 exclusive now, which you just saw at the bottom of your screens a few minutes ago. And Rachna is joining in with what she is picking on the Akzo Nobel stake sale, which has been the talk of the morning. Rachna.
The battle for Akzo Nobel's India stake is heating up. Berger Paints is likely to join the race to acquire Akzo Nobel's 74.6% stake as the global parent explores an exit from the Indian market. Sources have told CNBC-TV18 that the competition is between Berger, JSW and Indigo Paints, and the value of this deal is expected to be in the range of 10,000 to 12,000 crore rupees. Now, Akzo Nobel's India market cap currently stands at around 16,000 crore rupees, while its revenue for the September quarter was reported at 982 crore rupees. Let's compare that to Berger Paints' performance, where the revenue was at 2,775 crore rupees in the same period. As the contours of the deal, whether cash or a hybrid structure, continue to take shape, CNBC-TV18 is awaiting official responses from Akzo Nobel, Berger Paints and other companies involved. But we had the Berger management on the channel on November 6th, where they had said that though they usually look at smaller acquisitions, there is an interest in Akzo Nobel's India stake, and now we have it from our sources that the bids are being submitted for this acquisition. Back to you.
Thank you so much, Rachna, for that. A very interesting and an important development in the paint space. We'll watch out for Akzo Nobel and who eventually gets to buy that particular stake. You're learning that Berger Paints has now joined the race. But moving on, now let's introduce Growth Code, a special initiative by Grow and CNBC TV18. With the aim of empowering investors and traders, prominent investors and professional traders gathered at Grow's Trading Right event on November 9th to share their valuable insights and strategies. Here's a snippet of what Saket Ramakrishna, trader and founder of Quick Alpha, had to say in the common trading scams that traders need to be aware of. Let's listen in.
How many of you have come across messages okay, you can take my service. I will give you 2 free calls, right? 2 free calls. Only when you make profit, you pay me out of that profit, right? So this is one kind of typical scam where he's simply going to give you buy call or buy put, right? If it works, he's anyways going to get the money because you're going to pay out of the money that you have made through it. If it doesn't work, no need, like he hasn't lost anything. He has just convinced you for a couple of minutes, right? So a typical scam now, just assume this is happening on a large scale. Assuming that on a monthly basis, I target 200 people, right? 100 people, I say I will give you 2 free calls. If you make profit, pay my charges out of the profit. So let's say his charge is 3,000 or 5,000, right? So he gave me a call. I made 5,000 bucks, so the call went double. So he's going to charge me 5,000 from 100 other people. So 5 lakh per month is done, right? So this is one common type of scam.
Welcome back to Midcap Radar. Well, the stock in focus is Blue Star. This stock is in focus after Jefferies downgraded the stock from a buy rating earlier to hold, and the target price too has been cut. Upasana is here with more details.
Well, certainly, Jefferies has downgraded Blue Star from buy to hold with a target price of 2,340 per share. Now, the brokerage says that there is a limited upside after a sharp rally of 140% in calendar year FY24. Now, stock is currently trading at 60 times 1-year forward PE as compared to its historical 5-year average PE of 41 times. Now, management has also guided, according to the brokerage, in Q4 FY25, the demand is expected to witness a growth above 25%. Now, Jefferies has raised FY26, FY27 EPS by 5 to 6%, and it has assigned a target PE of 52 times with a 25% premium to its historical 5-year trading average. Now, the brokerage has also said that it stays selective in the discretionary segment, and it has also highlighted that the channel checks indicate that the rural demand is improving gradually. Dampened sentiments in urban demand can be a primary attribute to the rising inflation. Now, hence, Jefferies has given a buy rating on the stocks like V-Guard, Polycab, Walters and Crompton, and has given a hold rating on Havells on back of the weakness seen in the company's core business in H1. And lastly, the Jefferies has given an underperform rating on Whirlpool due to margin weakness and stretch risk reward, is what the brokerage has highlighted.
Pasna, thanks a lot for that. Now, Blue Star has also been downgraded after the run-up, and joining the series of downgrades in today's trading session is Zomato, and that is where Jefferies has downgraded the stock and to a hold recommendation from an earlier rating of buy, and they've also cut their price target to 275 from 335 rupees earlier. Now, what they're citing is that this quick commerce, which was earlier a big opportunity for these incumbents like Zomato, Swiggy, that is now becoming a concern because of the rising competition within the space, with Zepto, with Amazon also joining the fray. Then that is becoming a risk to profitability of companies like Zomato, and that is what Jefferies is worried about. Although it has said that while the valuations are not extremely expensive at this point of time, but it is this quick commerce opportunity that worries them. They are expecting 2025 to be a year of consolidation for the stock of Zomato, considering the fact that the stock had more than doubled in value in 2024. And they have also sharply cut their estimates for Blinkit. You remember, Goldman Sachs at one point of time had valued Blinkit more than the core food delivery business of Zomato, and here they have cut, Jefferies has cut the EBITDA forecast for Blinkit sharply over FY24 to 27 and has halved its target multiple to 6 times. Now, on the overall front for Zomato, Jefferies has cut the EBITDA estimate by 12 to 15%. The profit estimate has been cut by 17 and 18%, and the EPS estimate has been cut by 20 and 21% for FY26 and for FY27. So quick commerce is turning out to be a bit of a worry for Jefferies, and as a result of which, and that coupled with the run-up seen in the stock price, Jefferies has gone ahead and downgraded the stock and cut its price target as well. The stock today trading with losses of around 4%.
Thank you so much, Hormas, for taking us through the details of that particular note. Zomato, ever since it's entered some of the indices, has actually underperformed in line with some historical trends, especially with some of the stocks that have entered the indices and then have found the going tough. But moving on, another stock that's hit the upper circuit today is India Bulls, now known as Equinox. The NCLAT has approved India Bulls Embassy merger. Ashmit is here with more details on that particular development.
Well, this has been a long time coming. This entire deal was announced way back in August of 2020. And since then, there were regulatory approvals that came in February of 2021 from the CCI. The NCLT Bengaluru had granted its nod in April of 2022. But what's interesting is that while the NCLT in Bengaluru had granted its nod for this deal, the NCLT in Chandigarh in 2023 had raised an objection. The Chandigarh NCLT had taken into account concerns raised by the Income Tax Department, and on the back of that had passed an adverse order stalling this entire transaction, stalling this entire merger. Now, it is in response to that, after the markets had expressed concerns, that the management of India Bulls Real Estate approached the NCLAT, which is the appellate tribunal. They argued the matter at length over the last 12 to 13 months, and then subsequently the order came this morning. The order that has come from the appellate tribunal is quite clear. It has upheld the India Bulls application. It has set aside, it has dismissed the concerns that were raised by the Income Tax Department. It has also dismissed the concerns that had been raised by other companies that were seeking to intervene in this matter, seeking to object to this entire transaction. And with that, the NCLAT has paved the way for this transaction to go ahead, has given the green flag. One aspect, however, one caveat to bear in mind, this is the NCLAT, an appellate tribunal, which sits above the NCLT. However, let's not forget that the Income Tax Department, as well as the interveners who've lost this case, will have the option, will have the ability to challenge this before the Supreme Court. So that is still a possibility. But as of today, the NCLAT paving the way, waving the green flag.
Waving the green flag indeed, and it's showing up on the stock price as well in upper circuit now for Equinox India, formerly known as India Bulls Real Estate. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned. Back with us here on Midcap Radar, and India Mart is the stock in focus, and that is on the back of fresh brokerage commentary from JM Financial. It's a double upgrade there. Rima is joining in with more details on that. Rima.
Thanks so much for that. So indeed, JM Financial has double upgraded India Mart to a buy versus their sell rating earlier. Target price now stands at 2,450. And the key reason is the stock is attractive after the big underperformance and derating. So in the last 6 months, the stock has corrected nearly 16.5%. It's down 18% in the last 1 year. If you look at the current market price, it's sharply lower compared to its 52-week high of 3,200, and its all-time high level was nearly 5,000 rupees. Now, the reason why the stock went through this sharp derating is that, with the economic slowdown, the collections growth for the company came to a paltry 5% last year, and that spooked the street. Secondly, the number of customers who pay for India Mart services, the paying subscribers, that growth also came down very sharply over the last 6 quarters. It's been steadily coming down and it's been under pressure. So that's the reason why India Mart growth slowed down. Investors were concerned. Now JM Financial says that it's not that growth is going to recover immediately and materially in Q3. But over the medium term, will the collection be as low as 5% as it was in Q2? They're saying no. Over the medium term, collections will get back to low teens, and now the stock is trading at attractive valuation. It's at a near 50% discount to its own valuation that it used to enjoy, and therefore they find the stock attractive to buy at these levels. Back to you.
Thank you so much, Rima, for taking us through the double upgrade coming in from JM Financial on India Mart, the stock doing very well in the session. Well, in the last half hour or so, we've seen some stocks that have corrected quite sharply. MGL, for instance, Mahanagar Gas, this particular stock now trading near the day's lowest point, almost 3.7 to 4% lower. And this particular sell-off has intensified in the last half hour or so. The other couple of stocks that have seen a bit of sell-off is Motherson or Samvardhana Motherson. That particular stock too now trading near the day's lowest point. But on the other hand, a few stocks yesterday that saw quite a bit of a big sell-off were the capital goods names. Today, a few of them are attempting a bounce back. So large cap names like Larsen and Toubro now trading, attempting to trade near the day's high. Even names like BHEL, ABB, these are some of the stocks that are seeing a bit of a bounce today. But with that, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.